Hi, welcome to the HR European Fund monthly note for May 2020. Well, what another exciting month it's been for the fund. The markets have been rotating from value to growth to value, and that's been a really challenging time to run money for all fund managers. Luckily, we've navigated it pretty well. Our growthy stocks, which were probably the long bias to the portfolio, did really pretty well during the first half of the month, first 2/3 of the month in fact. And generally we were short the right kind of stuff, bit of travel, bit of real estate, some of the stuff the market really likes much less at the moment. That trend worked really well for us until the final week of the month when, a little bit like April, we had a reversal. A lot of those stocks rolled off, a lot of the favourite growers really reversed, they all came down, all the value stuff went up, and it was a big growth to value rotation. That's nothing new, the market does that a lot. It probably does it more than it used to. I think we feel there's a lot of funds, particularly in the European sector, that are quite biased towards having that kind of positioning. So, we've just got to get used to it, I think. It'd be lovely to create a bit less volatility in the fund overall, but it's something we're happy to keep working with. So what are our big winners? We had a lot of long winners this month, to be honest. They were led by what I call the ad stocks. So that's Idun and Adevinta. So as I joked in the monthly note, it's almost like people were doing an alphabetical search of growthy tech stocks and found the first two that started with A. Adyen, the first one, is a payment processing business from Holland. Online payments have really grown. Card payments have really grown during COVID. That's completely understandable. Will it stick? Yes, let's hope so. Has the share price gone nuts? Absolutely. Have we taken some profits? Yes. But that's been a great long for us. Adevinta, online advertising, think maybe a bit like an Auto Trader in the UK. So in the Nordics, again, more online commerce. That's been good. Experian, likewise. Online credit agency, effectively. Part of that e-commerce ecosystem, been strong again. So we've done well in the whole kind of e-commerce ecosystem area where online trading clearly has grown a lot during COVID. We've taken a lot of profits here. In fact, we've come out of Ocado, which probably one of the biggest winners in the fund year to date. Definitely the biggest winner in the UK stock market. It's just gone too far for us now. I mean, there's no doubt that the switch to online delivery of grocery has been a real boost to sentiment about how Ocado can push its tech leadership and really become a global player. But I think quite a lot of that's priced in now. We'll keep an eye on it. It's a great stock. May well go back into it if we get the pricing opportunity. The big short book wins this month. The standout one's Rolls-Royce, UK aero engine manufacturer, really struggling on many fronts, announced a massive restructuring. Then one of its long-term shareholders sold out in a block placing, and then S&P cut its credit rating. So restructuring, good news. Shareholder sale, but maybe credit rating downgraded to junk, bad news. Shares pretty weak all month. So I think one caveat you've got to remember with Rolls-Royce, it's pretty strategic in the UK, a bit of a national champion. So we need to think about how short we want to stay that one. Because fundamentally the government are likely to support it in the long run. We did well in real estate shorts generally. Klépierre, which is premium office in Paris largely. Are we going to need big front fit premium offices in any city in the world now? I don't know. But from a real estate perspective, that's more of a sell than a buy right now. And the other big winner has been Unibail-Rodamco. Out of town shopping centres, so much has been written. But when it comes down to it, globally investors are really struggling to decide what sort of roof and four walls they want to have to be invested in the real estate sector. And at the moment, it's not premium office and it's not retail or out of town retail. It's probably warehouses predominantly, anything in that e-commerce infrastructure again. So, the market's a little bit one directional in some of those respects. So we've had some good long wins. We've had some good short wins. We had a little bit of value that played out well for us in the month end, like Melrose, the tier one auto and aero supplier, and BNP, the French bank, that rallied really hard. So we were rebalancing and creating a more balanced book during the whole month. I think that rotation accelerated a bit and just reminded us of some of the dangers and perhaps taught me how crowded some parts of the European market are. So really need to remain very conscious of that. We get less of that in the UK market, I think. So just trying to keep an eye on that. The UK has been a major contributor to the success of this fund year to date. And we need to remember that the two markets do behave in quite a different way. So looking forward, coming out of lockdown has been good for markets. People have been pretty positive about the economic prospects recovering pretty quickly. People talking V-shape, not U-shape again. And most European countries that have eased lockdown have done so pretty effectively. So that's been good for markets. I think if that continues, then markets will continue to grind upwards. We need to be mindful of those rotations, and we need to also see what's just gone too far. There's been a lot of excitement priced into a lot of share prices about how quickly they'll recover and where they'll get to when they recover, plus all the long-term e-commerce winners. My suspicion is there'll be some great shorts in that mix as well. Likewise, there's plenty more value out there, probably a bit more in the UK than Europe right now. So we need to play the right trends there too, and maybe not be short the wrong ones. So we face another exciting summer for this fund, and we've got all the tools that are available to us. Fred's done another great job at the portfolio level, and I think we've just got to keep working this fund really hard to keep trying to generate these modest positive returns. And let's hope we're reporting on a good first half year running the fund when we come to the end of next month. Thank you very much again for your support.